Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts and independent investment advisor Sharmila Joshi, Foram Parekh of Indiabulls Ventures, and Sameer Kalra of Target Investing joining me on the show. Thank you to all for joining me on the show. Today we'll discuss counters like Tata Motors. Tata Motors fell in 13% in trade yesterday. What should one do? Titan is the second stock we want to discuss. Just dial and we'll discuss about the top NBFC bets that our guests are taking at this point of time. Let's start with the first stock. The first stock is Tata Motors. Now, basically what we've seen for Tata Motors is the fact that there are two things. Either the valuations are attractive or the core business is failing. So which one would you choose? Would you buy Tata Motors? Would you avoid it? That's the view we are looking at. Despite the big fall yesterday and the market rallying significantly, hardly any bit of covering is coming in on Tata Motors. So what's the bet on Tata Motors? Is there more downside? We'll ask again. So Sameer, I'll start with you. Yeah. Tata Motors, are you finding valuations now attractive, or would you stay away given the fact that core business itself is failing?
So we started buying it with a small percentage of the weightage in this, and we started at 220, 225. So we are still there. We have not bought more as people try to average it out. We are focusing more on the domestic market right now for Tata Motors, and they are gaining market shares throughout. They're almost a third number in PVs now, and they have good launches coming up. So I'm countering on that. As far as JLR issues are concerned, these are even out of Tata Motors' hands. They are not controlled by the company as well. So there's one Brexit issue and there's a tariff issue. Both are more macro-led issues, and I think these will get sorted out maybe another year. So same way we invested in Infosys on the downside, we are investing on the Tata Motors.
Okay. Secondly, do you feel that there will be a revival as far as JLR is concerned, or over the next at least short foreseeable future, there will be pressure?
See, there will be pressure because on the Brexit terms, if you see that October end, they have a council meeting which decides on the terms. And November they might have a Brexit deal also kicking in. If that doesn't work out as expected, there will be a further downside to JLR as well. On the China tariff side, I'm taking the extreme case that even after the midterm elections, there are more tariffs introduced. So I think next 6-8 months difficult for it. That's why we are keeping the weightage low, but we are not totally avoiding it.
Okay, that's the view. Sharmila, you agree that it should be accumulated in a staggered manner, or are you still concerned about the fundamentals of Tata Motors?
So, actually, very honestly, I don't sort of agree with the basic this itself that the core business is failing, because I think, for Tata Motors, what is the core business now? I mean, okay, bulk of the earnings is coming from the JLR bit, and yes, that concern is there, as Sameer was saying, both with Brexit as well as the US tariff, and now there is some concern in China as well, so, that is also playing out. Then on the domestic business, if you look at it, they have commercial vehicles, they have passenger vehicles. So, there are too many moving parts. And I think that is the big difficulty with Tata Motors, because, I think this is a stock that was correcting even when JLR numbers were good. Because at that time, there was some domestic concern. Now, when you're seeing good domestic growth, you're seeing, this JLR issue getting highlighted. So, I think it's a bit of a sentiment hit, and I like the stock. I've recommended, of course, DVR to retail clients, simply because you don't get voting rights, but as a retail investor, I've never really voted for anything, and you get more dividend. So I've always really recommended the DVR as a play. And yes, I think hopefully the valuations are in their favor, and if you're a long-term investor, definitely you can buy at this price.
Okay. On the valuation front, just this thing, I think a lot of people say that valuations are cheap compared to the other peers, but frankly, if you're looking at it, it's still more expensive than the actual global peers. You look at a Daimler, or you look at a BMW, or you take a look at the Volkswagen Group and all. It's trading at a premium because it's in the business. Because if you're valuing Tata Motors, you have to value JLR. So it's not exactly cheap.
Yes, I would agree, and I would think that, with that bit, but I think at the end of the day, you have to look at it more from a domestic perspective, since it's not listed there, it's listed here, and you have to compare it with the valuations here. And even over here, you will find that it is trading a little cheaper than the other play. But I think that could continue to happen, simply because, as I said, there are too many moving bits now, so you don't really know. So if someone is looking at it completely from your the perspective that you took, that the global peers, the global players are cheaper than them, then maybe you will not buy the stock. But if you're looking at the domestic opportunity, which is a big opportunity, then you will want to buy the stock. So I'm in the that half that would like to buy the stock.
Okay, Foram, two of our guests do believe that it's the right time to start accumulating Tata Motors. Samir already has some in his portfolio. As a house, what is your view on Tata Motors?
So we little have a cautious view on the stock, and we would want to stay away from the stock, of course, because we have seen that, you know, the JLR numbers and all, you know, they are not come good. And it is not just with the JLR, across, you know, the luxury segment, if you see the Audis and the BMWs, even they have not reported good set of numbers, you know. And when we have so many headwinds, you know, we have the trade tariff headwinds, and again, which is in the key market of China. So we would not want to avoid this scenario. And again, we have the Brexit issues and all. So there are too many, you know, headwinds. So we are like, why just invest in a stock which has so many headwinds? Of course, the domestic numbers are coming good. Its commercial vehicle is picking up. You know, the passenger vehicles is picking up. It has new domestic launches and everything. But if I have to look at the domestic side, you know, there are many other companies. If you look at Mahindra's or, you know, Ashok Leyland, I would want to have, I would want to skew towards them rather than, you know, going for Tata Motors. So I feel, since, you know, the core business should not be neglected, because it would not obviously expand the bottom line, which is very important, you know, for a company. So we would want to stay away from the stock, even though it is trading at good attractive valuations. But then we believe when there is no longevity in the business, you know, we do not want to go and buy the stock.
Do you see the fundamentals improving anytime in the short term?
I don't think so in the short term, because in short term, for the, you know, JLR and the Jaguar business and all, there are too many headwinds, you know. We just don't know what would happen the other day. And of course, I do see for the domestic side improving. I mean, if we see month on month, the commercial vehicle numbers are picking up, exports are picking up, you know. So the domestic front is doing really very good, but it's not having an impact on the bottom line. So if we want to concentrate more on the bottom line and the stock returns, then I think there are better you know, automobile companies which would give you quick returns than Tata Motors.
Okay, so that's the view that's coming in. Before we move on, Samir, what did you make of the announcement that came in? A plant shutdown, is that a matter of concern for you?
So that's not a matter of concern, because if you see globally, there are shutdowns when the inventory is already in the system. So they shut down preemptive the inventory holdup which is coming out. I think that's a better move, because you rather staying 2 weeks on and taking the expense and not able to push the inventory. I think you rather shut it down for 2 weeks and then take a call on how the inventory moves out. So I think that's a precaution view, and I think that's a better view rather than just opening up and piling up the inventory.
Okay, so I think we've got a 360-degree view as far as Tata Motors is concerned. Forum believes that they have recommended their clients to stay away from Tata Motors, while the other two guests do believe that it's time to start accumulating Tata Motors. So that's a call on Tata Motors. It's trading up by 1.5% in trade today. The other counter which fell in significantly yesterday was Titan. Now Titan has corrected all the way from levels of 1,000 to right now to almost 786. It's managed to move up almost 5%. One of the main reasons was the outlook that they gave was rather stronger, especially for the jewelry business, for the watches business. So the outlook given was rather strong, and it's been one of the outperformers as far as the FMCG index is concerned. Most of the other FMCG stocks have corrected much more than Titan on valuation concerns. So the big question that we're asking is Titan overvalued, or now after this 20-25% correction from the top, are valuations attractive for it? So Forum, what are your views on Titan? Are the valuations any bit of concerns on for Titan now?
We have a buy call on Titan. Of course, you know, valuations are at a premium side, but then we think that we would want to give this premium valuation to the stock, because if we look at the, you know, jewelry segment, of course we have an onset of the festive demand, and you know, they want to increase their market share in every, you know, jewelry business, be it the wedding jewelries or the diamond jewelries, you know, and we do see it increasing, you know, the market share, and of course, you know, growing at a CAGR of 20% and sustaining this CAGR, you know, I think it's a big move. So we would want to give a little premium valuation to the stock, you know, looking at the historicals and the way it is improving, you know, increasing its market share, and of course demand is there in the, you know, segment. So we are okay with the premium valuation.
You all have official coverage on Titan?
No, we do not have an official coverage.
Okay, and what's the trigger that you believe you're bullish on this thing? But tell us some key triggers which makes you bullish on Titan.
Okay, so first we have seen that there's a good shift from unorganized market to the organized market. Again, we are seeing that the festive demand, we'll see the wedding season being picked up, and that is why demand for jewelry is ongoing, and that is again a big trigger. Okay. If we look at the financials, it is maintaining a CAGR of 20%. Earlier it would be 25, but even 20% CAGR, growing at a 20% run rate is not a bad deal. Okay. So, which is again very good. They are going very aggressive on opening up their stores, and we have seen that they have been doing good in terms of same-store sales growth numbers. So on every parameters, it's standing tall, and that is why we are okay with giving a premium valuations to the stock. That's why and the fact that it's corrected from its top, 52-week highs,
Okay.
So it's a good deal, we feel, to enter.
Okay, Sharmila, you agree Titan deserves the premium valuation?
Yes, I think broadly for two reasons. One is that if you were to now start talking of valuations and that everything looks expensive, then somewhere I think you're discounting the whole consumption as a theme, because I think that once sort of normalcy returns to market, consumption as a theme will sort of be back on people's agenda, because that is definitely something where we are seeing that improvement. And I think secondly, within that space, another thing that works in favor of Titan is, of course, the fact that more organized jewelry play is seeing good traction, etc. And the fact that the rest of the listed space has had some concerns on the other, which has all played out over the last year. So jewelry, if within the jewelry space you want to buy something, then Titan becomes your preferred play. And there again, I think now, the kind of commentary one is hearing, and with the festive season coming up, and, the fact that they are saying that their jewelry, that they will deliver the whatever jewelry revenue they had spoken of, etc. Then the gold scheme that they ran, and, how they have sort of the gold procurement that they have, that policy that has changed. There was some near-term concern over that import duty. So, that correction did. Of course, as you said, everything in FMCG has corrected, and so has Titan. But I think it will continue to get that sort of premium valuation, and it's a stock that I continue to like.
Samir, what's your view? So two of our guests do believe that it should be accumulated. You have a similar view?
So I think if you see the 5-year average PE, it's been trading at 35-40 times. Yeah. Now still it's around 45-50 next year. Taken into that, there's no slowdown in the growth of the jewelry sector, because that's the main chunk of the earnings now. And I think that'll be really tough, because they are now on a higher base of the previous year. So I think that'll be really tough. If you see the new press release which they recently gave, in the first half itself, they have shown the challenges which are there lined up, even on the festive side. So I think the commentary is a little cautious, and I would like to see next couple of quarters to see whether the growth can sustain, so that the valuation can sustain. Because I think on the consumers, we are very cautious now. And we were cautious 6 months back also, because the base is changing. Okay. Now when the base changes, the volume growth is the main trigger for any revision on the downside or the upside. So I think over there we are a little skeptical. Okay,
Foram, get to respond, because some of the points that he said were valid, because now last year was coming on the base of the GST, it came in terms of demonetization. Base is getting higher for Titan, and when everything moves to Titan and business doing well, will they be able to do that run rate?
So that's what in the run rate from a CAGR of 25%, the management do know they have a higher base and they would not be able to sustain, and that is why they have guided for 20% run rate. So if I say 20% on a standalone basis, it's not a good, bad run rate. And secondly, if we say it's like a monopoly, people trust the brand, and they the demand is ongoing. You see there's lots of demand, and even during the non-wedding season also we see a lot of demands and everything. So it's not that people would stop visiting and buying jewelry. So I feel that it would continue to do good, and of course the growth rate would be little lower, but I don't think so it would be as lower as that one needs to wait and watch the performance. So I feel that it's a good deal even at the current rate, and of course the market share has been increasing, and the segments that they have, be it the diamond jewelry or the wedding jewelry. On all parameters, it's doing really very good. Demand would be there, which is more important,
Okay.
So I would want to go ahead at current levels.
Okay, so that's the view that's coming in on Titan. Two of our guests do believe that it's time to start accumulating Titan. It deserves a premium valuation. Samir has a slightly different view. He's saying that the management commentary was slightly cautious. Growth probably will not come in on as much as on a higher base from what we've seen over the past few years. The next stock that we want to talk about is Just Dial. Yesterday the counter was trading significantly low. It's down almost close to 20 to 25% from the recent highs. Today has managed to bounce back because there is a big short covering rally in the market. But overall, what's the business outlook for Just Dial? Is the business working or is there problems for the business? So Sharmila, Just Dial, what do you make of this stock? What should one do if someone wants to take any position?
Well, honestly, I haven't liked it as a story for some time now, because I think that it is slightly, to my mind, an outdated sort of a business model. Because at one time, yes, you use that as a service very frequently. But I think that now that people are more savvy and the kind of internet usage, etc., that there is, I've been negative on the stock. And they have also tried to get into different businesses and the grocery delivery, this, that. They've tried their hand at different models, but I have not really seen them succeed at or make any significant headway anywhere. So I think I will skip this one.
Okay, Samir, what do you make of Just Dial?
So we had bought when it was 430 previously and sold half of it when it ran up suddenly in a couple of weeks only. And it's still there in the portfolio, but that's only the profit sitting in the portfolio. So I think over there, the business, whatever said and done, there is a skepticism around it. But we believe if something is working, there is a cash getting created. Now, if that cash is getting created, I as an investor can give a benefit of doubt on that cash creation. So for me, the business, whatever quarters we've held on to, the results haven't shown any downside to it. So we are still looking for any kind of a downside, but we are not interested in buying additional weightage to the portfolio.
But it's in a business where, when every business it is, there is immense competition. People, I doubt, don't use too much. They just Google it because Google has. So what's the outlook? What is what's left for Just Dial now? Since you hold it, so just want to understand.
See, the outlook is very simple. Even if you Google any nearby requirement for you, Google shows the highest paid ad first, and that's the traffic. And that's 99% when you're showing in your locality is of Just Dial. Okay, whether it's paid or unpaid. Unpaid, Google will never automatically bring you up. Only paid, that's why Just Dial burns much more money now over there. Now their traffic has changed from a telephonic, which was a capex led for them, and now it's come more from the mobile downloads. Okay, so that has traffic is now I think 70% mobile and then 15% telecom, and the other is 10% from the website. So I think that kind of a division is benefiting them a lot. That's why you don't see any incremental push towards the whole system other than the advertising. But I still believe in the locality sense of it. If Just Dial is still the top at the Google paid services, I think still the usage is high.
But is it getting any benefit? That's the question.
It's getting the cash out of it.
Okay.
So that cash, when the SMEs and the registered people are paying in. See, me as a customer, I'm not paying in. But the people who are getting listed, that conversion is changing from 4.5 lakhs to 4.78 lakhs. So there is another 0.3 lakhs getting added quarter on quarter. So that is getting paid listing. So there's a part of free listing and there's a part of paid listing. So that is increasing. So he's getting cash out of it without doing much of capex at the end of it. So I think that's a good business. It'll be an unbelievable business by a lot of people, but I think it's a place where even if I have a small percentage of my portfolio, I can run for that.
Okay, what about you, Foram? What do you make of the business of Just Dial? Is it a failing business, or are there any opportunities here?
We do feel it's the business would not sustain and it's not appealing because I think the market share of Just Dial has been taken by many other search engines. For example, for booking a table, it's been taken by Zomato. So people do not really want to go on Just Dial and look for restaurants or book a table and all. So we feel that the business model is not very appealing, of course, and it's reflecting in the financials of the company, and that is why we would want to stay away from the stock.
Okay, so that's the view that's coming in on Just Dial, not the most positive view that comes in. Samir has some in his portfolio as more of a portfolio bet, so not too much positive news coming in on Just Dial. And the last stock we want to talk about is pretty much the sector of the day. Now, yesterday, after all the comments that came in from the RBI over the past few days, yesterday SBI came out with saying that they will be buying a lot of assets. So there is a spurt as far as the NBFC rally is concerned. Today, most of the NBFC stocks are anywhere up between 5 to 10%, be it someone as large as a Bajaj Finance or a Piramal Enterprises. They are all up anywhere between 5 to 10%. But most of these counters have corrected. But we also need to understand that most of these counters have corrected significantly, 30-35% from the recent highs. Is there scope to start accumulating NBFCs, and which is the top bet? That's what we're asking. So, Foram, among the NBFCs, what are you recommending clients?
So we are recommending HDFC Ltd. If you see, the stock hasn't corrected as much as the other companies. Of course, HDFC has a good corporate governance. There is no doubt about it. And if we look at the housing finance segment, in the NBFC space, I think the demand is there till 2022, as is the aim of the Modi ji to have housing for all. So there is no question of demand being there in the sector. Again, if we look at HDFC in particular, corporate governance is there, so even that is not a question. And of course, the financials looks really very good. You do not even have to look at the financials. It's growing at a very good pace, and valuations are also justified. So I think on every parameter, HDFC stands tall, and we would want to give more importance to the corporate governance side, and that is why out of the entire pack of NBFCs, we would want to go for HDFC.
Okay, HDFC is the top pick as per Forum. Sharmila, among the NBFCs, what do you like?
First of all, I have to congratulate you for picking this as a sector. I never thought it would be the sector of the day. Well, I think honestly, within that pack, I think there is still a lot of concern, and I think that maybe you could, if market sustains well and good, but if it doesn't, then maybe you could see correction round 2. And I think within that, if you really get that, then I think a good stock to look at could be Bajaj Finance. We've seen a good set of numbers from Bajaj Finance these last couple of quarters. The way they've been able to grow their book, the way they've been, even where housing is concerned, they are more in the rural and affordable sort of housing bit. And even when it comes to consumer finance, I think there's great granularity in their, the kind of lending that they've done. I like the management. They seem to be on a good track, where earnings growth, because especially last quarter, it was quite a challenging quarter, but you saw a fairly good performance from them. So I think all things put together, for me, Bajaj Finance would be the stock.
Okay, and you're not concerned about the valuation?
I'm concerned about everything at this point in time.
Yeah.
But if I have to stick my neck out and buy something, it would be Bajaj Finance.
Okay. So but no other thing you would touch in this space?
No, I mean, see, at the end of the day, HDFC is a absolute blue chip name, so I'm not going to argue with that. And there could be obviously other stocks but since we had to pick one, I said, let me go with a safer name as compared to, because there could be more risk attached to some of the other, where there is a bigger gold portfolio, or there is like a DHFL, there is, that whole concern over their book, etc. So I've just gone with a slightly safer name. But obviously, I think I'm concerned about everything, and at the same time, I think that there is a good possibility in some other stocks as well.
Okay, and Bajaj Finance is trading at the day's high. What about you, Samir? NBFC?
So I really want people to stay away. But if you really want a stock, I think HDFC is the safest in that kind of a scenario, because it doesn't fall much. See, right now the portfolio has to look into that sense that it doesn't fall that much. And NBFCs, as far as concerned, the main concern is the CP they have raised in past couple of years and the funding they've got. So 60% is still funded by mutual funds. They saw a 2.11 lakh crore withdrawal of liquid funds, which has 40% of NBFC's CPs. So I think the whole cycle till the time doesn't come back, the short-term funding, whatever the announcements, can be a sentimental plus point. Even if you see a NHB announcement which went from 24,000 crore mandated to 30,000 crore, only 8,000 crore till date has been used out of it. So you're saying that you'll buy this much is a whole different thing than you actually buying it out.
Okay.
Because banks will not give you just for free, or they'll not take the benefit out of it. they'll do a very fair deal, which I think will take a lot of time to come out. So I think there's a lot of risk in the system, and even if you get these kind of bounces for a couple of days, think of getting out of it.
Okay, so that's the view that's coming in on the NBFC space. HDFC and Bajaj Finance are the stocks that have been spoken about, and Samir says use these bounces to exit the NBFC space because he shares a cautious view on the NBFC space. But with that, it's a wrap on today's Hot Money. Foram, thank you so much for coming in. Sharmila, Samir, thank you so much for coming in. Ask BQ comes up next. Stay tuned to Bloomberg Quint.